Hi, everyone. My name is Darren Coleman. I'm a Senior Vice President with Raymond James in Toronto. And today I'm joined by Ishali Mulchandani, who's an accountant both in Canada, United States, and the UK. And you're the founder of IDM Professional Corporation based in Ontario. So Ishali, thanks for joining me today.
Thank you, Darren, for having me. It's a pleasure.
Now, you have a very interesting expertise of being operational and knowing the tax rules and being an accountant for people or anyone that's in Canada, United States, and UK. How did that come to be? How did you get all three countries under your belt?
So it was actually organic. It wasn't intentional. So we moved here from UK about 18 years ago. So I came with the UK designation when we moved here. And then when we were here, I was planning to move to the US soon after. So I started studying the US designation. I had to go to US to do the exams. It has to be done on US soil. And then that move didn't end up happening. So I was here. Now, with being in Canada with UK and US designation, I realized the importance of getting a local one, which I did, and hence ended up with 3 designations. So if you look at my wall of certifications, it looked like a cocktail, and it looks like I literally went country hopping to do them, but it wasn't like that. It's just that we moved here and I intended to move to the US in California, which is where my brother lives, but loved Canada too much and didn't want to leave in the end. So here we are.
Well, that makes you very special. We do a lot of work, as you know, with people who have money and family on both sides of the border,
Yeah.
Canada, United States, and we often get
Yeah.
entangled in the tax and investment issues. The UK is another wrinkle we sometimes trip over. So the fact that you've got all three does make you a very special unicorn.
Thank you. Thank you. As somebody jokes, you have the triple threat. So we
Yeah.
do have,
Well, hang
we
on. Can
do
you play
have,
first base? If you can play first base, you're really dangerous.
so we have clients who move from here to UK or vice versa, or even do business interests in the UK, and it's nice to be able to help them. And I mean, we most commonly come across US and Canada more than UK in here, but you know, there we do have clients who are citizens in all 3 countries. I didn't even think that was possible, but they are, and they have interests from all 3 countries. Yeah.
Well, Canada is a nation of immigrants, so it doesn't surprise me. Now, today, you and I are
Exactly.
going to have a number of conversations. So, for those of you watching, we're going to cover a bunch of issues that will matter to people that have that kind of reality, that kind of complication in their lives. But today, I
Mhm.
wanted to jump on something that another niche that you found, which is very compelling to realtors in particular. So, my understanding is that as of October 2020, and this has been a long awaited option or opportunity, is that successful realtors in Ontario have finally been able to be granted the right to incorporate their businesses. So I want to talk about that because you've become one of the experts in Ontario at advising on the tax matters pertaining to this. So why don't we
Mhm.
begin with what is this thing? You mentioned to me a term called a PREC,
Correct.
P-R-E-C.
Yes.
So what is that?
Yes. So it's a personal real estate corporation. So historically, realtors were not allowed to incorporate. They had to operate in their own name. So any commissions they earned, any income they had was reported on the personal level. And a lot of them had good years and not so good years. And when they had good years, they had to pay the higher rate of tax. And it was becoming, that was one of the biggest issues for realtors, my clients in particular, were experiencing. And I felt their pain. Like I do feel very passionately about helping people keep most of what they make, right?
Yeah.
By way of good tax planning strategies, but there wasn't a lot of room to plan there. Now there is. So I'm really excited about it. Yeah.
So that's very true because like they're not like they don't it's not like they work for the government or their teachers or they do have these up and downs as part
Yeah,
of their reality, right? So by having the
exactly.
ability to incorporate, what are some of the big advantages over just earning all that money directly? Because in the past they would have just earned it as their own income and been taxed on it. Now that they've got this incorporated opportunity, what benefits do they get from that?
So their first number one benefit is the taxation. So on a personal level, so let's say somebody um, did about $300,000 in a year. So again, personal tax rate is graduated, but I'm going to give you a marginal rate, which is an
Okay.
overall average on their income. So anything over 220,000 will attract over 50% of tax.
Right.
Whereas in a corporation, um, up to 500,000, you pay the lower tax, which is 12.5%. And then anything over that will then attract 26.5%. So when the corporation pays tax, so A PREC is a corporation, is a separate legal entity than the registrant, which is a realtor. So the corporation pays tax, leaving more money within the company for investment opportunities, or even for taking money out. So the individual who's a realtor can only take money out of the company as salary or dividend, right?
Okay.
And that's when they'll pay their personal tax rate. So this allows the realtor to only take what he or she needs to survive on in the year. So let's say a realtor wants to take only $90,000 in the year because that's all they need to survive, then they can leave the rest of the money in the company to grow in ways that they wish to. And because they're paying a lower tax, there's more money left. Whereas if they take it all as it is currently, as they are, then they pay tax on all of it, has less money to then reinvest. Or, for example, like I have a client who knew she was going to have a baby in the next couple of years, and she was getting some great years. And she says, Ishali, I just wish that there was a way that I could, put some aside so that when I'm not making that good money, I can, and the corporation would have been perfect for her in that situation. So in those years where she's making less through the company, like 100 or 90 or less, then she can draw more salary
Right.
to satisfy her
Because
expenses.
because the whole point of this really only works for realtors that have a good degree of success, and they're generating more in commissions and revenue than they're going to spend. So I mean, if
Exactly.
they're living hand to
That's
mouth, this probably doesn't make any sense, right?
no, the cost benefit doesn't make sense. Like, it's not for everybody, but as long as realtors understand what this vehicle can do for them, and it's not just a tax deferral, there are other benefits also, that you can actually have your family to be shareholders, which is not something that we accountants can do or some other professionals can do, like doctors. But again, those would be non-voting shares. So it's very, very important that it's only one realtor per corporation, the main registrant, because at the end of the day, even though it's a separate corporation, they have responsibility to their clients. Um, and um, and as long as those TOSI rules are met, because again, corporation, it falls under the tax on split income rule, so they can't just have spouses and children in as shareholders if they're not actually doing any 20 hours of work and so on and so forth. So that's another benefit. So a lot of realtors like to flip properties.
Mm-hmm.
And
Yeah,
that when they do, they don't have the courtesy of capital gains exemption of
that's right.
50% like we do. So it's all considered as ordinary income. Again, they can flip properties within the company and thereby paying only 12.5% on that capital gain as well. So that benefit is also good. At the end of the day, Darren, it boils down to, a lot of people might think, what is that magic number
Right.
beyond which I should incorporate? I'm telling you, there's no one size fits all, because most realtors don't only have this as their source of income. There are other sources of income as well. So where are they in their journey? Are they close to retirement? Do they want that RSP room or not? Because some people are, let's say somebody who's just starting out and making good money, their goals might be different than somebody who doesn't care about RSP, because when you put money in RSP, that lowers your tax liability as
Right.
well, right? How
Right.
much money do you need to survive? Maybe your spouse making a lot of money, you don't need that much money. So then in that case, even if they're making less, it's probably better for them to incorporate. So there are a lot of variables that determine that answer. So I would love to be able to say, okay, anybody making over this should incorporate, but it's not so simple.
No,
Other factors
like
need to be
everything
considered.
else, the answer is it depends, right? But I think
It depends.
yeah, I think the key message though is, if someone's been successful in their career as a realtor, this is definitely a conversation they should be having with you,
Yes.
because there's so many ways they can use this new capability. And you're right, where are they in their journey? Are they young and starting out, and they have the ability to
Mhm.
shelter enormous amounts of capital on a tax preferred basis? Are they at
Yeah.
retirement, so there's ways they can incorporate other family members in? Are they having an up and down life, like they're going to have family, kids, and they want to have years where they're working, years they're not? How do they smooth that income? There's so many
Yes.
interesting ways to do this, that they
Mhm.
really do need to sit down with an expert like you and walk you through, have you walk them through. Here's how you can shape this new
Yes.
capability in a way that matters to you, right? Because this isn't a
Yeah.
free thing. Like, at the end of the day, there is a cost to setting this up, right? Like, there are some things
Yeah.
to be mindful of, right?
Absolutely. There's a cost to setting up. There's accounting and lawyer cost to set it up. it can range anywhere from $1,500 to $2,000, depends on their structure. But also there is an ongoing compliance, like filing a tax return for an individual realtor right now as a part of their tax return, their T1. So it's like a business activity statement within it,
Right.
which is less costly to do than filing a corporate tax return, for example. So an ongoing, you got to put aside another 1,000 or two for that. So you have to ask yourself this question, that does the cost benefit make sense for me?
Mm-hmm.
How important is this extra money that the company's going to invest for me to have for later years, that is totally justified? So,
Right.
so those questions have to be asked from, so like I said, somebody starting out probably making a smaller commission right now, this may not be good for them, but they could be flipping a lot of properties
Right.
on
That's
the
true.
side that takes them over that threshold, right? So then this could be for them. So that's why I said, what are the other sources of income? Not just this, right? And
Right.
then they can, and then do they have people in the family that they want to share this extra income with? So there are a lot of factors. I mean, somebody might make a lot of money, but then they may not have somebody that they can do the income splitting. But even so, the tax deferral itself is the biggest and the hugest benefit that they can have for this. And also
Yeah.
to an extent, you know, corporation does limit liability to an extent as well. Yeah.
Well, that's true. There's a whole bunch of benefits that come. Obviously, there's a cost to set it up, but then if
Yeah.
the client
But
knows,
that's one time. The setup cost is one
that's right.
time, but
Yeah.
the compliance cost is ongoing, and it's important to bear that in mind as well.
But if the benefits to the person can well
Outweigh.
supersede that, right? So this can be a hugely powerful thing, which is why realtors wanted it for so long. The smart ones, they knew what
Yes.
this could do. One of the other
Yeah.
elements to this is how to invest properly inside of the holding company. And
Yeah.
we've had years of expertise at helping people, business owners, create tax effective investment portfolios inside of their corporations. So for many realtors, now that they're able to do this and contribute capital, we can kind of share those techniques with them about, okay, now that you can do this, here's how to do it
Yeah.
really, really well.
Yeah.
But here's one of the things I love about you is you don't just do tax preparation, you do go that extra distance and give really advanced tax advice to people and help them
Yeah.
navigate their complexity. So we're really
Yeah,
glad to
I
know you.
actually love doing that. I really, really do, because when I moved here from UK, that's the first thing that I noticed, that, oh my God, Canadians pay too much tax. I really have to help them find ways to save some, or, you know, or to defer it to a point where they're not paying high tax overall. Yeah.
Well, I think every successful person, it's their obligation to structure their affairs so that they pay the correct amount of tax, right?
Yeah.
And
So a
so
common
being confident
question, a
is
lot
really
of,
important.
sorry,
No, it's okay.
I just forgot to mention this. A common question that a lot of people have for PRAC is that, can more than one realtor become a shareholder? And that's, the answer is no. It's
So it's
one.
one per, right? So everyone has,
Yes,
so
one
everyone has their
registrant.
own.
Yeah. So instead of paying them, the brokerage will pay the PRAC directly, and they have to be mindful of closing their own personal HST. If they're incorporating, then they have to register that with RICO. They have to also get their HST registered under their PRAC. They have to have a bank account set up, and they have to close their existing one, because that transition also has to be very smooth. Otherwise, it can be a bookkeeping nightmare.
Right. So, and good news is you can help walk them through all those individual steps,
Yes.
but after they know
Yes.
that it makes sense for them. Because I think if they know the
Yeah.
size of
So
the prize, they're willing to do the work.
yeah. No, you know what, Darren? Actually, sometimes people don't even know if this is right thing for them or not. So
Yeah.
at the stage of the idea conceiving in their mind, to determine, is this for me or not, also is something that I'm currently helping realtors with. For some, it's not a good idea right now, and for some, it is absolutely a good idea. And if it is so, then do they have other activities? Should we structure a whole co-op situation? You know, do they want to bring in family members, and how is the best way to structure that, and then move forward with the transition, and then the good record keeping and the compliance at the end. So the whole 9 yards there from start to finish. Yeah.
Well,
We
yeah,
help
because
them.
there is a lot to do. But again, if someone's a successful realtor, this is absolutely good news for them. And we're going to share
Yeah.
this with some of our clients that are realtors that we know they've done quite well, and
Yeah.
make sure that their friends know who you are too. Because I think
Yeah.
we love it when there's a new opportunity for people to save, defer, and reduce their tax burden. So this is an exciting
Yeah.
one for that audience. I wish I could incorporate. We're not allowed to do that yet, but I'm certainly aware of the benefits because I see what I can't have. And so that would be
Yes.
great. So if the realtors out
Yes.
there that are watching, we'll help connect you to Ishali so that you too can make sure your affairs are structured correctly and you get the right answers for you. So Ishali, I'm going to leave it there. You and I are going to talk again on a few other topics that matter to people. But for today,
Sure.
thank you for joining us. And for those of you for watching, thank you very much. We'll talk to you soon.
Thank you.